Welcome back to Investing Talk podcast. Today, we're zeroing in on a question that's probably been on many of your minds. Is Archer Aviation a good time to buy now? We've gathered, well, a substantial stack of recent sources, everything from detailed investment analyses to market reports, expert opinions, really trying to give you a clear, concise, and most importantly, insightful picture of this intriguing company. Our mission, as always, is to extract the most important nuggets of knowledge so you can quickly get well-informed without feeling, overwhelmed. Before we really unpack all of this, if you find this analysis helpful, please remember to hit that subscribe button, give us a like, and certainly leave a comment. Your support truly helps us bring you more of these in-depth looks. And hey, if you feel inclined, you can even buy us a coffee. We appreciate it more than you know. Also, if there's a specific company you'd like us to look into next, just drop a comment below after we're done dissecting Archer. Your suggestions truly guide our next explorations into the market. Okay, let's get into it and see what the numbers and experts are telling us about Archer Aviation. Archer Aviation is undeniably a name that sparks a lot of conversation, positioned right at the cutting edge of what's known as AVTOL, electric vertical takeoff and landing market. It sounds like something straight out of a sci-fi movie, really, aiming to transform urban air mobility. But beyond that futuristic appeal, what does the fundamental analysis tell us about where they actually stand right now?
Yeah, it's fascinating. And what's particularly illuminating here is just how early stage Archer truly is. Our sources indicate they reported a trailing 12-month net income of, well, a negative $513.7 million.
Wow, negative $500 million.
Exactly. Over $500 million lost over the past year. This isn't just being unprofitable. It signals a company deeply embedded in an intensive investment phase.
Yeah.
They're pouring capital into groundbreaking research, development, and, let's face it, the monumental task of commercializing a completely new form of transportation. So their profit margins are quite predictably deep in the red. It reflects these colossal ongoing expenditures rather than significant revenue generation at this point.
Right. Spending money to make, well, hopefully, money later.
Precisely. And if we connect this to the bigger picture, this kind of heavy cash burn is typical, even expected, in these nascent capital-intensive sectors like urban air mobility. Think about it. Building an electric aircraft from the ground up, navigating complex regulatory landscapes, developing the infrastructure. It demands enormous financial resources. Companies in this space, and this includes competitors like Joby Aviation, are essentially in a race.
A race to prove the tech works and get that market share first.
You got it. A race to prove their technology and secure market leadership before widespread commercial operations can even begin. Archer's position appears promising, sure, but it's crucial to remember that this entire industry is still very much in its infancy.
That truly puts the scale of their ambition into perspective. So if a company is burning that much cash, isn't profitable yet, how on earth do we even begin to value it? Are there traditional metrics that apply here, or are we looking at an entirely different playbook for a company like Archer?
That leads us to a critical point for investors, doesn't it? For companies like Archer Aviation, traditional valuation metrics, like the price to earnings or PE ratio, they simply aren't applicable. They have negative earnings.
Makes sense. No earnings, no E in PE.
Exactly. The sources confirm no PE or forward PE is available. And when you see a market capitalization of $6.61 billion with virtually no revenues disclosed, well, traditional sales multiples would make its valuation seem incredibly stretched, just way out there.
Okay.
However, this is where you have to shift your perspective. Look at the consensus analyst price target. According to our research, it averages $13.13. Now, that implies a significant upside, maybe 26%, from current trading levels, which are hovering around $10.80.
So analysts see potential despite the lack of profit.
Yes, but this outlook isn't based on current profits because there aren't any. It's based purely on the expected progress. Progress in business development, achieving crucial milestones, future revenue projections once their aircraft are certified and operational. It's a valuation based entirely on potential. And that's the key insight here. It's a bet on the future.
Okay, so we've dissected the challenge of valuing a company like Archer without traditional earnings and seen that analysts are betting heavily on future development. But for many investors, the immediate pulse of the stock, its day-to-day movements, tells a different story. Let's shift gears a bit from the long-term vision to the immediate action. What are the technical charts revealing about Archer's current momentum?
Right, let's look at the charts. From a technical standpoint, Archer is currently trading right in the range of, say, $10.67 to $10.83. What's interesting here is that it's sitting almost precisely on its 50-day simple moving average, which is at $10.82.
The 50-day, what is that usually stressed?
Well, it often suggests a period of short-term consolidation, where the stock is kind of finding its footing after a move.
Mm.
Crucially, though, it's trading well above its 200-day simple moving average of $8.31.
Okay, that's more positive long term.
Generally, yes. That's often seen as a strong indicator of a longer-term underlying support trend. And the Relative Strength Index, the RSI, is around 40. This points to maybe slight weakness in buying momentum, but it certainly isn't in what we'd call oversold territory. For a high-growth stock like this relative calm around the 50-day SMA, well, it could either precede a significant move, up or down, or indicate it's just consolidating gains before the next major catalyst hits.
Consolidation, or maybe the calm before a storm.
Could be. And one of the defining characteristics of Archer stock, and frankly maybe the entire EV tool sector, is its volatility. Our sources show a high beta of 3.9.
3.1, wow.
Yeah. It means its price movements tend to be about 3 times more volatile than the overall market. Add to that a volatility index of 7.9%, and you're looking at a stock that can fluctuate quite dramatically.
Yeah.
Big swings.
Right.
Now, this isn't necessarily a negative for all investors. Some traders love volatility, but it's absolutely essential to be aware of if you're considering an entry point or an exit strategy, especially for short-term trading.
That high volatility certainly grabs attention and reinforces the high-stakes nature of this industry, doesn't it? What about the overall sentiment surrounding Archer Aviation? What are analysts and the broader market saying? And what major news or events should listeners be aware of that might influence this sentiment?
The sentiment is quite revealing, actually, especially for a company at this stage. Our sources highlight a strong buy consensus from 8 out of 9 analysts covering the stock.
8 out of 9, that's pretty strong.
Yeah, it is. Now, that then translates into an overall moderate buy rating when you average things out, perhaps, but still. As we mentioned, those target prices suggest significant upside potential within the next 12 months. This kind of strong analyst support for a pre-revenue company is a powerful signal. It suggests that, the smart money believes in the long-term vision and the company's execution path.
A strong buy consensus is certainly encouraging, especially for a company in such an early pre-revenue stage. But for a listener considering this, what's the counter-argument? Are analysts maybe being a bit overly optimistic about the timeline, the regulatory approvals, market adoption, given the colossal hurdles still ahead?
That's an excellent question, and it really speaks to the inherent risks in these pioneering industries. While analysts are optimistic about the destination, the journey itself is incredibly complex, very uncertain. Their optimism likely factors in, let's say, best-case scenarios for FAA certification and market penetration.
Best case, right.
But the path to commercialization could easily be longer and definitely more expensive than currently projected.
Longer and more expensive. Classic project risks.
Exactly. And the broader market sentiment, if you look at the Fear and Greed Index, it's currently neutral to moderately fearful, around 39. That's on a scale of 0 to 100, where lower numbers signal more fear.
So general caution out there.
Yes, it indicates a general caution in the wider market. But crucially, no strong bearishness specifically towards Archer, which is a subtle but important distinction. The market isn't necessarily betting against them, just maybe cautious overall.
Got it. So with all that in mind, looking ahead, what are the major catalysts, the things that could really move Archer's stock price? What should investors be watching for beyond the upcoming earnings report on August 7th, 2025? I'm sure that will be closely scrutinized.
Oh, absolutely. That earnings report will certainly offer a window into their operational progress and, critically, their cash burn rate. But beyond that, the most significant long-term catalysts, they really revolve around FAA certifications for their eVTOL aircraft.
The regulatory hurdles.
Exactly. We're talking specifically about achieving their G1 certification basis agreement for the Midnight aircraft, which they have, but then moving towards type certification, and finally, full Part 135 operational certification. This isn't just a hurdle. It's like a multi-year, multi-billion-dollar gauntlet that very few companies in history have ever navigated successfully for a completely new form of air travel.
A gauntlet. I like that analogy.
Any positive news here, any step forward would be monumental.
Yeah.
Beyond that, successful urban air mobility rollouts in key launch markets. That would be huge. Securing major new partnerships, maybe with airlines or transportation networks, or even significant government contracts, those would also be big boosts.
Makes sense. Real-world application and partnerships.
And then on a broader scale, increased regulatory acceptance of eVTOL technology across different countries. Substantial infrastructure investments, charging stations, vertiports, or even strategic acquisitions within the sector could profoundly impact Archer's valuation. These are really the plot points in Archer's story that could send the stock soaring, or stumbling if they don't happen.
With all this potential and excitement and the sheer ambition of building an entirely new industry, well, there must be significant risks involved. What are the main red flags or challenges that investors should really be aware of when considering Archer Aviation?
Absolutely. This naturally leads us to consider the substantial challenges, and there are quite a few. From a stock-specific perspective, Archer faces, as we said, incredibly high losses and a significant cash burn. That's number one. Their success is entirely contingent on achieving incredibly difficult product certification.
That FAA gauntlet again?
Right. And then critically, on mass market adoption, which is still a big unknown, will people actually use these things widely? There's also the constant specter of potential dilution risk if they need to raise more capital down the road.
We might issue new shares.
Exactly, which could reduce the value of existing shares for current shareholders. That's always a risk with companies burning cash.
Okay, so company-specific risks are clear. What about the sector?
Well, on a sector level, the eVTOL industry is, as we've discussed, still nascent, very new. It's grappling with immense regulatory barriers that are still being written, literally. Significant technological uncertainties. This is bleeding-edge stuff, remember. And of course, intense competition from other well-funded players, all trying to do the same thing. Plus, you have macroeconomic risks. Things like sudden interest rate changes or broader tech sector corrections could disproportionately impact its volatility.
Because it's seen as a high-growth, maybe speculative tech play.
Precisely. The high beta and volatility we discussed earlier aren't just numbers on a screen. They directly imply significant risk, especially for anyone looking at short-term trading. It's a high reward, but you have to acknowledge equally high risk proposition.
Okay, so bringing all of this together, the potential, the risks, the numbers, the sentiment, what does this truly mean for our listener? If someone is considering Archer Aviation, what's the final assessment, the recommendation based on all these factors? Is now actually a good time to buy?
Right, the bottom line. Our comprehensive analysis rates Archer Aviation at 6.5 out of 10.
6.5 out of 10. Okay.
This score reflects its strong growth prospects, its genuinely groundbreaking position, but it also frankly acknowledges the substantial risks and its current very real unprofitability. Fundamentally, it is a high-risk, high-potential stock, positioned in a cutting-edge, yes, but still unproven industry. It currently shows attractive upside according to that analyst consensus we talked about.
The $13.13 target.
Exactly. But it carries significant execution and market risks that are simply impossible to ignore. You have to go to eyes wide open. So for whom is it suitable? For those with a moderate to high-risk appetite, definitely, and crucially, a strategic long-term view on the emerging urban aviation sector itself. If you fit that profile, it could be a suitable, albeit speculative, investment.
And what about entry points or managing risk?
Our sources suggest an ideal entry price range might be somewhere between $10 to $10.50, trying to balance that risk against the potential reward. For traders looking at shorter time frames, maybe a stop loss around $9.50 is recommended to limit downside exposure if things turn south, with an initial take-profit target maybe near $13 to $13.50, which aligns with those analyst targets we keep mentioning.
And for the long-term believers.
For long-term investors, this stock truly suits those who are comfortable with ongoing losses, potentially for years, and significant development risk. You have to deeply believe in the revolutionary long-term potential of the eVTOL market itself, not just Archer, to hold this through the inevitable ups and downs.
Wow, that was a truly eye-opening look into Archer Aviation. It's almost mind-boggling to think about the hurdles and the sheer ambition required to build something like this. It really brings home that this isn't just about a stock chart, is it? It's about betting on the very fabric of future transportation, with all the incredible possibilities and, frankly, the immense challenges that come with that.
Indeed. And understanding a company like Archer really goes far beyond just its financial statements, doesn't it? It requires a holistic view. You need to look at the ecosystem it operates within, the evolving regulatory environments, the rapid pace of technological advancements, the societal shifts. All these things will either propel or hinder its growth.
It forces you to think bigger picture.
Exactly. It encourages you to think critically about how these sweeping macro trends can profoundly influence individual investments, hopefully making you a more informed and strategic decision-maker overall.
Absolutely. So as you, the listener, mull over this analysis, consider not just the numbers, but that broader narrative of innovation and disruption. What does Archer's audacious journey tell us about the future of travel? And maybe a question to leave you with. What other innovative companies are on your radar that might follow a similar high potential, high risk path into uncharted territory? Thanks for joining us for this in-depth analysis. We hope you feel well informed and ready to make your own decisions.